Okay, our final session of the day is all about you. What questions do you have? We have a panel of our experts to answer your inquiries on whatever audit questions you have. Just use the chat function to type in those questions and we'll answer them in the order they come in. We will also be answering some of the questions that weren't answered from previous sessions. Let's get started. Question number 1 is, where can they find the templates for budgets?
So on our website, I believe there's a form section of the website, and that's where they'll be. There's going to be one for the counties, for the cities, and for other entities.
Wonderful. Thanks, Alex. Okay, going back to Mike and Heath's session this morning, we had a question about the rent received from a government entity. Is that considered lease proceeds?
I think we determined it would due to GASB 87, that you would use that in other financing, so either that would be a lease proceed.
I'll add a little bit to that. It is going to depend if it qualifies as a lease under GASB 87, and that's going to really depend on what the lease terms are. If it's a short-term lease that's less than 1 year, then you could just qualify that as regular rent expense, and that would not be considered lease proceeds.
In addition to that question, someone had added, referencing the city and state tax collected, is that referred to as sales tax?
I believe the sales tax collections in that could be recorded with sales tax in that section on the income statement.
Mike, can you give us some NDCC sections that require local governments to go to bid?
So there's a few sections. It really depends on the entity. So if you do need more specific codes, feel free to reach out. 4801 is for public improvements. So anything over 200,000 to bid those out. School districts, I know they use a 15.1 code, and there's various other sections in there that talk about what they have to bid out. For counties, they use a 24-05 code for road construction and highway equipment. And that threshold for highway equipment, I believe, is anything over 100,000. So if you need more codes more specific to your entity, feel free to reach out, as there's a few different codes out there.
Absolutely. Okay, this question was from Alex's session and said, does a capital budget need formal approval?
So under current Century Code, you do not have to have a capital project budget. That doesn't mean you can't. If you do create one, it probably is going to be best practice just to have the board approve that type of a budget.
Okay, and this other question is a bit of a statement, but if the budget amount to be raised is 12% a year, in that increase, is the 5% delinquency part of the 12%?
I think that kind of depends on how you ended up getting to that 12% number. Because really, when you're looking at how much property tax you're going to collect as your end goal, or what that end amount is, that should already include whatever your delinquency amount is. If your 12% was calculated before that, you are still able to increase that up to another additional 5%.
Wonderful. Okay, let's see here. I've got lots of great questions coming in. So in reference to Dan's PowerPoint, what is the bill number that goes along with the audit threshold change?
So the bill number for that was Senate Bill 2180.
Wonderful. Thanks, Dan. So a capital fund can be used for expenditures that are capital in nature, correct? For example, a large multi-year maintenance project, would that necessarily count as a capital asset?
That's a good question. I think you'd have to still consider like what the project's for. Is it just for repairs? Usually for capital projects, it would be for a specific like road, bridge, building, something that would be really a capital asset when that's done. That's what I guess, yeah, I need some more information on that, but that's kind of what I have so far.
I can add a little bit to that. If you're looking at something that's really just going to be maintenance, it's not really improving the useful life of your existing asset, then you would not consider that a capital asset. If the asset or whatever's being created has over 1 year useful life, then you could consider that a capital asset.
Great. Okay, so let's see. When using the state's budget template, which sheet in the template should they use for the enterprise funds?
I think for the enterprise funds, you would not need to have a budget. That's not one of the types of funds that are required under Century Code.
I'll add to that too. So if you want to do something like that, it would be more of like a non-levy fund, or if you still wish to have a budget for enterprise fund, we're not saying you can't. So it'd be up to that client.
Absolutely. Okay, so in regards to the reviews, how does a local government find out if they qualify for the basic or extended review instead of paying for an audit?
So it first starts with a threshold. So right now, and again, I stated it, but I'll say it again, just so it's easily understood, because we had several thresholds in play over the last several years. But currently, if any year that is, if you have not had an audit approved by our office, then any year, doesn't matter what year it is, how far back it is, if that revenue amount is under the 2 million, you are eligible for just a basic review, or to start with the basic review. If you would have been over one of the previous thresholds, it would trigger, as I mentioned, an automatic extended review. But again, in either way, you would not have to get an audit. So just to give an example, if say 2018, if you haven't submitted anything to our office since 2018, and those prior years, 19, 20, 21, 22, if your total revenue is under 2 million, you don't have to get those years audited. You can just start even back to 2018, because we have not approved anything. It has not been submitted to our office for review. That can work. And I mentioned it can get there's all kinds of what if scenarios you can play with this. So please contact our office if you want to run a specific example by me. But that's the basic one to think of, is if you haven't had an audit approved by our office and you're under 2 million, you do not have to be audited.
I'll add one thing to that too. So I'll just make sure, if you have other reasons to have an audit though, make sure if there's like a single audit that's needed, or a bond covenant that requires you to have a audit report, keep in mind those are things can come into play as well.
Yes, absolutely. Okay, let's see. So regarding audits that are considered delinquent, is there a potential penalty for continuously being delinquent, other than the potential to lose funding if they're operating on mostly federal funds?
Our office itself doesn't assess a penalty, but as was just mentioned in the question, that is the biggest risk that you run, is that you may not be eligible to receive funding from other sources, whether it's from the state, the federal government, from lending institutions, other government entities that might give out grant monies. All of those things, most of them require some form of audited financial statements.
Absolutely. So for those basic and extended reviews that are done, is there a letter or report that is actually issued? Are these posted on the state website like the full audits are required to be?
For both the basic review and or if you get an extended review, there is a letter that you receive. And what that does is it kind of bullet points what the different things are, the different items that we had to fix, or the different numbers we had to adjust. As well, we return to you a copy of the completed report with all the numbers in the correct places, so you can see for yourself what it should have looked like, and you can use that as your template going forward. And then those reviews and those completed financial statements are posted to our website. In the past, we haven't posted the letters, but those will be going forward.
All right, let's see. So how does the state auditor's office plan to handle this increased workload of 200 plus additional reviews when the audit wait list is already pretty large, considering these are not done by outside firms?
Also, this last session, we requested more FTE and were granted that by the legislature. So we're in the process of hiring some people that will do more of those extended reviews. There is a timing difference between them. It can take hundreds of hours to do an audit, and it typically only takes 20, usually 10 to 20 hours to do an extended review. So there's quite a difference. A single person, a single person can only get done about 7 audits in a year. They could get done dozens and dozens of extended reviews.
Wonderful. Okay, can you give any insight on how many outside firms within North Dakota are performing government audits in comparison to the work done by our team?
There are currently 13 other firms doing audits compared to us. We have, as far as market share goes, if you want to look at it that way, we conduct about 20% of the audits that are done, and the other firms pick up the rest. A lot of those firms might be single practitioners that maybe just have a handful of clients, but we are not the largest. We don't do the most. We're just there to fill the void and help out with that. Not all those firms are from North Dakota. A few are from neighboring bordering states.
Absolutely. Okay, we've got lots of questions coming in on the chat box here, so keep those coming. Next question is, how often should my bank reconciliations be completed?
I'd say preferably once a month, basically right when you get that bank statement. I would suggest doing that as soon as you have time to do so, just because, you know, the information is freshly in your mind. So if there are any issues, you'd be better equipped to resolve those issues.
A good practice of that too also is some actually have a procedure every month that they go through between people in the office. And if there is an error of some sort, they will work that out before moving on into next month. And that will help prevent future issues when you have multiple months behind on those.
Will the state be sending reminders about this new fund balance report that was being talked of?
At the moment, not that I'm aware of. Again, this was not a requirement by our office to have this report submitted to us. If it had been, then we'd be more inclined to send that out. But this was put out there by the legislature. We're just a repository for the information. We have, however, tried to do our due diligence by getting the word out. That's why it was mentioned at this audit summit. That's why it spoke at the recent Association of County meetings about this as well. And at any future meetings that they have, the Association of Counties that we are invited to, we'll probably mention it again as well. But so we're trying to make sure that they are aware of it. I'm sure the Association of Counties is as well. But as far as an actual reminder per se in the mail or whatever, not from our office.
Okay. Next question here in the chat is, what is a budget test?
If you're thinking of it in terms of the audit, you're going to be looking at, look at the client's budget, see what kind of documentation they have. You might test various elements of that budget to make sure that they have proper support, that their budget is in compliance with the various entry codes that are out there. Yeah, really, you're just looking at what kind of documentation do they have.
I'll piggyback on that from the review or from the extended review perspective. The budget test is similar to what Alex just mentioned, although probably not as extensive. We'll more so, primarily the support, we'll look to see, whatever numbers you put on there, how did you come up with those numbers? What support do you have for those numbers? And that's pretty much the extent of it, is just to make sure that it makes sense based on the numbers you put in.
Okay, is it true that no county will qualify to submit annual financial reports instead of an audit?
Yeah, currently there are no counties that receive less than $2 million of revenue. So at the moment, the answer is no. I suppose it is always possible in the future that a county's revenue could drop below 2 million, but typically revenue over time tends to go up, not down. So I don't foresee that. There weren't any, there was some, I think there's one or two that were within several $100,000, but they were still substantially over that 2 million threshold.
Next question here is, what records do the auditors want for capital assets?
Really, you should be being able to show any kind of invoice that deals with any type of road purchase, any type of construction project you have in your improvements. So progressive estimates also, if you have a project in CIP, we're gonna want to see those progressive estimates to know it makes up the non-depreciable asset. So it's really, like I mentioned in my presentation, just having a binder or folder with all that information in there so you have it in one place and not trying to go through all of your other files is gonna help you out.
Okay. What are the requirements for subdivisions that have their audit completed by private firms? How should those be reported to the SAO?
So those audits will be sent into our office for review as well. And then there'll be a team reviewing that and giving comments, any potential issues that they see in those reports back to both the firm and the entity.
Okay, this is a somewhat long question with a couple options here. So for closing a capital fund road project that was funded through county road and bridge fund, should the remains need to be returned to A, the general fund, B, the road and bridge funds, or C, remain in the capital fund to be reallocated to another project?
That's a good question. I think there is some area there for some management discretion on that. I would say if you had a list of projects that was going to be involved in that capital project fund, you could keep that money in there until those were spent. If you figured that there was another road that needed some work along with that first one that you decided to work with, that would be acceptable. If you did want to return that back to, let's say you transferred it from the general fund to that fund, that could be a possibility as well, but just be careful with transferring when there were specific purposes, and if it came from like the highway funds, and probably make sure that goes back to that one too, because it's only for highway type expenditures.
Absolutely. Okay. Next question in the chat box here. Would building or purchasing and renovating a new shop building be considered essential infrastructure for the infrastructure revolving fund?
Could you repeat that question?
Yeah, absolutely. Would building or purchasing and renovating a new shop building be considered essential infrastructure for the infrastructure revolving fund?
Okay, and so the answer to that is no. What the revolving loan fund is for is the infrastructure for that new building. So the actual construction of the building itself is not eligible for the loan fund, just all the infrastructure leading up to the building, which you basically think of it as primarily it's all the stuff that's underground, if you will. It's your water lines, your sewer lines, your roads, your telephone lines, electrical lines, all that sort of thing. It's all the amenities that you need to operate the building or have the building operational. It's not the building itself.
Okay. What does the review process look like for the larger cities in North Dakota who have independent external audits completed and then submitted for review to the NDSAO?
So when those come in, we use the NASDAQ checklist for going through and making sure that the audit report meets the standards that are out there. We have it's a full checklist, and we go through that and just make sure that all the components of the report are accurate, that the statements tie out, that the opinion is correct, that the proper note disclosures are in there, all those sorts of things that the auditor would already be aware of that put together your audit report. Those are the standards that they have to follow in preparing the audit report. We're just using basically that same checklist to make sure that they did in fact follow those standards.
Okay, this next one. Looks like this person has checked for audits on the website and seen that some are delinquent, and one posted in 2018 was over that threshold of 2 million. Are we following up on these governments that need to have these audits?
We continually cycle through the different ones that we are missing. We send out delinquent letters through our administrative personnel for those ones. Now that Senate Bill 2180 is come into effect, we may be contacting some more of those just to see if we can get them caught up. At the same time, we're trying to get the word out otherwise as well. I mentioned it here for this summit for anyone that's listening, that if you're delinquent and want to get caught up, this is your opportunity to do that. A few weeks back, I went and spoke at the Rural Firefighters District Association meeting, mentioned it to them. Tomorrow I'm going to be in Dickinson talking at the Rural Water District Association meeting. I'll mention it there. And so we're trying different avenues to get that word out that if you are delinquent, this is your opportunity to get caught up.
Absolutely. Okay. Does the SAO have a list of firms that local governments can contact about getting an audit?
We do not. We don't give out a list. We're not trying to show preference for one over the other or say you should or shouldn't use any particular firm at all. What we do is we point to the State Board of Accountancy. They are the ones that maintain the list of who is licensed to be able to do government audits, and they can get a list of names from them. Now, a lot of the ones on that list probably aren't taking audit clients because they're full, but they are the ones that maintain the list of who can do those audits.
Okay, wonderful questions here. So someone asked if we expect to host more training sessions throughout this year and in the future. And I just want to say that we were given a training and education coordinator from the legislative session this year. And so we're hoping this person is going to come in and take on that role. So we plan to continue with our audit summit and then also to be able to continuously find ways to add new resources and training and education for our clients. So another question we have here, should I do a bank reconciliation for all bank accounts, even my savings?
That's a good question. And yeah, typically savings don't have a ton of activity depending on who you are. But it is a good idea to still reconciling it. And in some cases, it might be as simple as looking at your month-end balance sheet and your month-end bank statement, and it might equal just right off the bat. And at that point, you've basically reconciled it. So it's pretty simple.
Okay, next question here. Was there a confirmation about ARPA House Bill 1505 funds? Should they be reported on the CFA and subject to the single audit?
No, those don't get included at the county level or the local level. The state used revenue replacement, so they're basically just using the funds like they would for their regular state funds. So they don't have any federal identity now when they go down to the local level. So those would not go on your CFA and they would not go towards your $750,000 threshold.
When would a local government use the special revenue, debt service, or capital project funds? Can you give some examples of what you would use those funds for?
So for special revenue funds, depending on the entity you are, but you know, a lot of different examples of that would be if you have some mill levy funds that were for specific purposes, those will be that. I think if you have like a grant from like the state, for example, ARPA, we recommended to have a separate fund, you know, for that to keep track of those expenditures. Schools, you're gonna have like a food lunch program. Many different examples. Debt service ones will be funds that will be towards like a bond or loan, or something like that. Capital assets, a capital project fund, that would be for, say if you're building a road, you might actually name that fund that road, or a building, something to that sort.
One thing I'll add to the special revenue fund portion of that is you can kind of think of it as if there are strings attached, you know, whether that's, as I mentioned in my presentation, from a restriction or from a commitment. If there's any kind of string attached to the monies on this is to be used for this purpose, you know, whatever that purpose might be, if it's specified for a purpose, you should set it aside in a special revenue fund.
What are common capital asset mistakes?
So the big ones, you know, just referencing back to the presentation would be, you know, just entities just missing capital assets, not maintaining that listing, not being able to provide support, I think is really the big ones. And then, you know, also going back to bidding, not following Century Code if something doesn't need to be bid out. So those are really the main common ones. So just missing assets, not having support, from what we typically see in our audits.
I'll add on too. So also with when you have bigger projects like through DOT, for example, you might have capital contribution that the auditors will require those number as well from our clients. So that's one topic that we get to discuss a lot. And just projects in general, sometimes it's hard for someone to determine if it's going to be a maintenance project versus a infrastructure or road project. Some of those are management type decisions, but you know, if it's like if it's extending the useful life of it, or taking one out, putting one in, those are some good thoughts to go through to figure if you're going to have a capital asset or not.
All right, this question is referencing Century Code 112302. The statement is about the cash reserve for the general fund not to exceed 75%. Does this apply to all government units like water districts and health districts?
So 112302 is specific to counties. That's in their section of code. Now there is that interim fund code that I was talking about in my presentation. I can't remember it off the top of my head, but it was in chapter 57. And that particular code is really talking about counties, cities, other municipalities such as park districts, and various other entities that levy taxes other than school districts. And that 75% rule applies to all of those entities.
Wonderful. Okay. So do I need a single audit if in a 2-year audit, each year is below the threshold?
The $750,000 threshold is per year. So you would need to exceed that $750,000 for the year. So if you're under that for both years, you wouldn't require a single audit.
Great. This question says, should I have a GASB 54 policy? Where can my entity start with that?
Yep, I think it's a good idea to have that. Like I said in my presentation, if you can kind of describe kind of who's responsible for, you know, commitments, assignments, such things like that, and kind of gives a good explanation for what types of funds you have. And I think, you know, we do, if somebody did want a template, we do have that ability to give one of those out. Obviously, those are management decisions, but we can give you a head start on that. So if you would like one, just we can email that to you, whoever needs one.
Absolutely. It looks like we've got a couple questions about FEMA here. Brent was not able to be on our question panel today, but in the email you received yesterday has his contact information, and feel free to reach out to him at any time. The next question is, how does my audit opinion change when most of the records were not present?
Well, an audit opinion can, if you really don't have records, and it's pervasive, meaning that it's affecting all different areas of your financial statements, that could very well lead to a disclaimer of opinion, which just basically means that we're unable to give an opinion. If the improper documentation or lack of documentation is just kind of in one little section and it's not pervasive, that could lead to a qualified opinion, which basically just means that everything's good except for this various section, which we weren't able to give an opinion on.
And I'll piggyback off that. So whether you get a qualified adverse or disclaimer of opinion is going to be based on the significance, like Alex said, and that's defined in auditing standards. So it's not something that's fully subjective. You have to kind of meet the category requirements of whether it's pervasive or if it's isolated and whether it's significant or not. So that will drive the decision of what type of opinion as well.
All right. If a private firm does an entity's audit, does the state auditor's office see it?
Yes, all audits that are done by the private firms are submitted to our office for review, and those get reviewed against the checklist to make sure that that audit report meets the audit standards. And then once we have determined that it does, it is approved, and that's actually the completion of the audit, and then it gets posted to our website.
What would happen if I find a mistake in my revenue coding?
So in your general ledger, it could be as simple as doing a corrective entry. So doing a debit and credit and moving to the right category. If you have a corrective entry policy, I'd make sure you're following that, kind of referencing back to Heath's presentation too, but really just doing that entry and then following that policy if you have one.
Okay, we did just receive a question about whether or not these answers will all be included at the end of the summit. And this presentation will also be posted with the rest of the recordings on our YouTube. And we will notify all attendees when those recordings are up. And we will also post to social media notifying you so that you can rewatch these sessions as you wish. Next question is, what are common agreements that would fall under GASB 57?
I'm not sure if they mean GASB 57 or GASB 87. I know 87 is one of the new standards that came out lately. One common agreement that we've seen is, say, motor grader leases. You're leasing the right to use that asset. The contract is over a 1 year period or is more than a 1 year period. Maybe if you're leasing a building from another entity, that could potentially fall under that if it's more than 1 year. If it's under a year, you're not going to meet it's not going to fall under that lease standard.
And then to piggyback off of that, for GASB 87, there is an implementation guide that was issued by GASB that goes through a lot of the questions that determine whether your agreement signifies that you have control of the asset or that it would meet the definition to be a lease under GASB 87. So that's also a good place to look as a resource when you're evaluating those agreements.
Awesome. This question says, how do you uncommit a fund balance?
So the way you would do that is when you do commit the fund balance, that's usually a board action and should be noted in the minutes. If you're going to change that or maybe uncommit those, then that'd be a board action as well.
What happens if bank reconciliations have been off for multiple years?
I would first go back to, I'd say when it first started happening, the very first month, and see if you can identify the error there. Another check figure I didn't mention during my presentation was you can definitely look at the amounts cleared on the bank statement and kind of total up what you're clearing from your ledger and see if those match up as well, because they probably should. But if it is something where the amount of difference stays consistent from month to month at, let's just say $1,000, and it's, over the course of 2 or 3 years, I don't see any reason why you can't just adjust that to your fund balance. I would suggest presenting it to your board though and getting approval from them.
Okay, it looks like potentially our last question, and it does say, what happens when a capital project is postponed but was included in the budget?
So one thing you can do there, if you had budgeted for a capital project, say in your general fund, you can transfer those funds out and create a separate capital project fund. That way you don't have to budget for it again in the next year. It's already going to be in that capital project fund. So when you finally do get to that point of spending those dollars, it's already there and ready for you to go. You can leave it in whatever initial fund that it was that you originally budgeted for. You're going to have to budget for that expense again, but just keep that in mind when you're looking at that estimated cash amount to begin the year, that you'll want to have that as part of your consideration, since you never actually spent that money.
Okay, we did have another question pop up here in the chat box. Do you anticipate GASB 96 having a significant impact on your clients? Will the requirements be similar to those of GASB 87?
The requirements definitely are similar in nature. I personally don't expect it to have a huge impact on a lot of our clients. I don't know, Heath, if you want to jump in on that to see with your experience with it so far, if you think it's going to have much of an impact.
Yeah, I don't think so yet, but we'll continue to watch that to see if anything is more on the radar about that.
And I did want to point out with both GASB, with the service-based information technology agreements and leases, there's also an omnibus that came out that gave some more clarification on both SPIDAs and leases that can help for your determination of whether things fall under that classification, because the reporting of SPIDA is very similar to what the leases are.
All right, we've got a couple more questions popping in here. So if you increase your asset capitalization threshold, can you derecognize fully depreciated assets to clean up your asset listing, or leave them alone since they qualified at one point?
Well, that's a very good question. I guess I'm not sure. That could be a management decision on that too. If they're fully depreciated, it wouldn't be a problem to keep them on there. If you change your policy at that point, you could leave that as is. If you wished to remove those, I suppose you could.
All right, another question here. Are the funds received from the opioid lawsuit considered federal funds? If not, should they still be considered intergovernmental revenues?
I think I would need more information on where that lawsuit is coming from, who's getting it, what kind of legislative action happened to be able to say whether it would be federal funds or not. So if whoever asked the question wanted to provide that information, we could look into that for them.
Yes, absolutely. Okay, have you done a lot of lease calculations for your clients, or are the clients the ones doing them typically?
I think for the most part, for most of our clients, they are providing us with the information. The auditors are having to evaluate those leases to see if they fall under the standard. They might be doing the present value calculation. I do think that so far we've found that the vast majority of our leases in total for a lot of our clients are not material, which then GASB 87 tends not to apply in that situation when that happens. We do have some clients though that they have done those lease calculations themselves. And it ends up in their report because they do end up being material. So it really varies upon the entity.
Okay, do you know where in North Dakota Century Code is the information regarding a limit of 20% of revenue in an enterprise fund that can be transferred into the general fund?
We could get back to someone on that one. We do have that answer. We'll just have to find the code. So there's too many of them.
Yes, absolutely. Feel free to reach out to our office. You can call us at any time and we can give you additional information or further insight into these questions. All right, it looks like it's about the time to conclude our 2023 Audit Summit. We so appreciated having all of you join us today, and we will be sending out an anonymous survey following the conclusion of today's conference, and we'd love to hear from you whatever feedback and comments you may have. All sessions are recorded and will be posted on our YouTube and website shortly. You can also watch our Facebook and LinkedIn for information about where to find those recordings. And we will send an email to all attendees notifying you that the recordings are up. If you ever have any questions, always feel free to reach out to us. We are always happy to help. Thanks everyone for joining us today and have a great rest of your day.